I did a ton of research and I found the top 4 high yield dividend ETFs that you can invest in today to start earning regular monthly passive income. But before we get started, make sure you subscribe to my channel. I'm posting videos regularly about my stock market research that includes high growth, high yield, and unconventional ways to invest in the stock market. So today I'm not going to be talking about some boring ETFs that everyone tells you to buy, like VOO or VTI, that pay like a 3 to 4% dividend and require you to have like $4 million if you actually want to retire off dividends. Instead, I'm going to show you 4 ETFs that all meet 3 important criteria that I was looking for. So number 1, diversification. Since these are ETFs, you aren't putting all your money into a single stock. So number 2 is monthly payouts. So you get paid consistently instead of having to wait every 3 months for those quarterly dividend payments that most ETFs offer. And number 3 is high dividend yields. So you can earn 11 to 12% with these ETFs I'm going to show you instead of the 3 to 4%, and you can retire with like a fraction of the money. One thing that I do want to note is that in order to make money consistently and pay out these high yield dividends regularly on a monthly basis, all these ETFs sell call options against their holdings. If you aren't too familiar with this strategy, it's a way that you can turn stock market holdings into cash flow. But selling out of the money and at the money call options can limit the growth of the fund, but it does provide great cash flow. So these funds will likely perform better in a bear market or even a sideways market. But if we have a sustained bull market like we have over the past decade, then traditional ETFs are going to perform better than these high cash flow ETFs. But given that we're currently in a bear market according to some people, and the market has been moving sideways a lot, I thought it'd be a good time to make this video. So let's get started. Number 4 is RYLD, which is the Global X Russell 2000 Covered Call ETF. So RYLD is an ETF that tracks the Russell 2000 index, which, if you don't know that index, it tracks the 2000 small cap companies, which is quite a bit different if you compare it to like the S&P 500, which tracks 500 large cap companies. So instead, in RYLD, we're looking at 2,000 small cap companies. The fund managers are actively selling out of the money and at the money call options against the holdings in the fund. Let's take a look at a few key metrics on RYLD at the time of writing. So the price is just about $19.50. The dividend yield is 11.94%. The expense ratio is 0.6%, which is pretty decent, not as low as some Vanguard funds, but still not super high. Like, we want to avoid things over 1%. The assets are $1.4 billion in money in this fund, and it pays a monthly dividend. So this is a great ETF for people who want maximum cash flow and maximum diversification among small cap companies in the Russell 2000. Number 3 is JEPI, so the JP Morgan Equity Premium Income ETF. So JEPI is an ETF that holds large cap American stocks and sells call options against those holdings. They don't necessarily track a particular ETF, but instead the fund manager chooses the holdings. Let's look at a few key metrics on JEPI at the time of writing. So the price is about $56. The dividend yield is 11.13%. The expense ratio is 0.35%, which is almost half of the RYLD fund that we just went over. The assets in the fund currently is $14.4 billion. And the dividend frequency is monthly. But since this ETF doesn't track a particular fund, I'm going to go over the 5 top holdings in the fund. So UNH, United Healthcare, PGR, Progressive, XOM, ExxonMobil, and BMY, Bristol Myers Squibb. What I do like about this fund is that it's managed by JP Morgan Asset Management. So it's easy for someone new to investing to choose this fund because they know that their money is being managed by one of the biggest banks in the world. And there's also a little bit more strategy behind this index fund, since most of the other ones that we're looking at just sell call options against an ETF. But we could read their strategy right here. So instead, JEPI aims to build an equity portfolio through a proprietary research process designed to identify over and undervalued stocks with attractive risk and return characteristics. All right, number 2 is QYLD, the Global X NASDAQ 100 Covered Call ETF. So QYLD is an ETF that tracks the NASDAQ 100 index and sells call options against those funds. The NASDAQ 100 is made up of 100 large, mostly technology companies, and it had insane gains over the past decade, especially 2021, but a lot of the stocks have retreated over 50% since then. So this is another ETF from Global X, the same fund managers from RYLD, the first ETF that I showed you. Let's look at a few key metrics on QYLD at the time of writing. So the price is $16.50 just about. The dividend yield is 11.2%. The expense ratio is 0.60%. Current assets about $6.4 billion in the fund, and the dividend frequency is monthly. So this is probably my least favorite of the three that I've showed you. So while QYLD is great for cash flow, it does have one huge flaw. So people buy tech stocks, like stocks in the NASDAQ 100, for growth because they have high growth probability. And like I said earlier, since these funds sell call options against these stocks, the growth is really limited. If you compare just buying and holding a fund like Invesco QQQ that also tracks the NASDAQ 100 to buying QYLD, you would have been a lot better off holding QQQ because of the high growth that all these stocks had over the past decade. All right, my number one dividend ETF for high yield monthly passive income is XYLD. So the Global X S&P 500 covered call ETF. So XYLD is an ETF that tracks the S&P 500, which the S&P 500 holds 500 large cap American companies and is basically the gold standard in index fund investing. This is another ETF offered by Global X, so they offered two others that we talked about, RYLD and QYLD, so this is XYLD. So as you can see, the Global X team has a few different funds that are made for people who really want to maximize the cash flow of their investments. Let's look at a few key metrics on XYLD at the time of writing. So the price is just over $40 at about $40.22. The dividend yield is 12.98, which is the highest of any four ETFs in this video. The expense ratio is 0.60%, so all the Global X funds that I talked about have the same expense ratio. The assets are about $1.93 billion in the fund, and the dividend frequency is also monthly. So XYLD, I really love this one because it offers great cash flow, and it's great for those who want to keep their money tracking a fund like the S&P 500, which is something that they probably already trust. All right, that's a wrap on 4 high yield dividend ETFs that you can buy for monthly passive income. I do want to reiterate the fact that these funds sell call options against their holdings, which is a way that you can turn your stocks into cash flow, but it does hinder the growth of the fund. So while these funds will likely perform better in a bear market or a sideways market, they will almost certainly not perform as well as just buying and holding in a sustained bull market. So if you think we're going sideways for a little while, then these are great options for you. I do also need to clarify that this is not financial advice. Thanks everyone, I really hope you enjoyed this video. If you did, please click that like button, and if you want to see more videos about my stock market research, make sure you subscribe to my channel.